Steve, when we last got together in both January and February, it was a tale of capital markets volatility. We had markets down, then way down, then recovered in both those months. So now when we look at March, how did capital markets do, and how did the closed-end fund market itself do?
Sure, it was certainly a V-shaped recovery for the capital markets and closed-end funds as a whole. There was a lot of volatility, but for the quarter, looking as a whole, it's up about 1.6% for taxable closed-end funds, and munis had a huge quarter. They were up about 5.6%.
Steve, I noticed discounts are now inside of about 6% for the all closed-end fund market. And we've been recently talking about discounts as wide as 8-9%. So with discounts narrowing, does that limit the opportunity set for you across the mutual funds?
In my opinion, no. When you think about the market cap weighted average at about 5.8%, I think it's important to understand where those components come from. And I mentioned that munis had a huge quarter. Closed-end fund investors tend to buy assets as they go up in price, and discounts have narrowed on muni closed-end funds. So they are a surprisingly narrow 2%, and that's about 30% of the market. And then you have very large covered call closed-end funds that have been kicking off fairly high yields that have attracted investors that are trading at mid to low single digits as well. And so maybe 40% of the market, in my opinion, is too narrow for us to focus on, but the remainder is always going to give us some opportunity. And today, we'll talk about the average discounts in our portfolios in a little bit, but I'm seeing a lot of opportunity in closed-end funds that are still in that 8 to 12% range. We certainly have been trimming some of the winners in the portfolios, muni specifically, but there's a lot of parts of the closed-end fund market that remain very much out of favor.
If I'm hearing you correctly, the sum of the parts may look a little narrower than you're used to, but when you dig down into some of the sub-asset classes, some of these things still trade from at a pretty wide discount.
Definitely.
Great. Steve, we haven't talked about our mutual funds in quite some time, so maybe this would be a good time to talk a little bit about sort of the positioning and just things that are going on across RiverNorth's 4 mutual funds. So starting with the more equity-tilted funds, that being RiverNorth Core Opportunity and RiverNorth Equity Opportunity, can you just give us some highlights about what's been going on in those 2 strategies?
The RiverNorth Core Opportunity Fund is about 50% invested in equities today and 50% fixed income. On the equity portfolio, we have roughly 3/4 of our exposure in U.S. stocks and 25% international, including emerging markets. On the fixed income side, our portfolio consists of mostly mortgage and corporate credit. And when you look at the closed-end fund allocation, it's about 75% of the portfolio. The average discount for this portfolio is 13.5% at 3/31. And thinking about the different groups, equity closed-end funds, our focus is really on obviously we're looking at wider discounts than average and funds with large distribution rates. In a world where everyone's buying the cheapest ETF possible, I think it's a competitive advantage for closed-end funds that have a high distribution rate. So if and when investors come back to the closed-end fund market on the equity side, I think they'll favor some of the wider discounts with high distribution rates. On the fixed income side, there's a lot of good opportunity to own multi-sector fixed income funds. And in many cases, we're buying cousins of some of the popular open-end funds at 90 cents on the dollar, which always surprises me that people are pouring money into, a large open-end mutual fund, but completely ignoring its cousin in the closed-end fund market.
So they're paying NAV, if you will, for the open-end version of a closed-end fund strategy they can buy at a discount to NAV.
Yes, I mean, that happens across market cycles, but today there really is quite an opportunity because the closed-end fund market tends to launch IPOs of funds that have become popular, and those popular funds remain that way. And it's just strange to me that people continue to buy open-end funds at par or net asset value when you can buy closed-end funds that in many cases are the widest they've been in years.
Steve, any other comments on core opportunity or equity opportunity funds?
Sure. On the equity opportunity fund, that is one of our smaller funds. That's about 85% or 80% invested in closed-end funds. That portfolio is about 90% invested in U.S. equities and about 10% international. This is a concentrated portfolio with the fewest investments across our fund complex, and the average discount is quite wide at 17.5%.
Steve, turning our attention to RiverNorth's fixed income strategies, RiverNorth Double Line Strategic Income Fund and RiverNorth Oak Tree High Income Fund. Can you talk a little bit about what's been happening in those 2 portfolios?
Yeah, as our listeners know, and our investors, the RiverNorth Double Line Strategic Income Fund is a diversified fixed income portfolio. Again, there we have an overweight to corporate and mortgage credit. RiverNorth is managing roughly 50% of the portfolio, with Double Line Capital managing the balance. And Jeffrey and his team's portfolio, we have about 30% of the portfolio invested in his opportunistic income sleeve, which is focused on mortgage-backed securities, and then 20% of the portfolio in a core bond strategy. Going to the RiverNorth portfolio, we are running a diversified fixed income closed-end fund trading strategy. The average discount there is about 11%. So we talk about the average discount for bond funds being, low single digits, but in my opinion, there's a lot of opportunity to own, in many cases, large liquid closed-end bond funds that are trading at very attractive discounts.
How about RiverNorth Oaktree High Income Fund?
Yeah, the Oaktree portfolio, this is a portfolio managed with Oaktree Capital. About 40% of the portfolio is invested in high-yield bonds, 40% invested in bank loans, and the 20% is other fixed income, mostly not agency mortgage-backed securities and emerging market bonds. The way we get that exposure is that Oaktree is managing roughly 2/3 of the portfolio, and RiverNorth's managing 1/3 of the portfolio. I mentioned it earlier, but there are pockets of the closed-end fund space that I think are exceptionally attractive, and high-yield bonds and bank loans remain very much out of favor. And so we're excited about the opportunity in this portfolio to own some bank loan funds and high-yield funds that, they've been trading at premiums at some point in the last few years, and we're looking at an average discount on this portfolio of roughly 11%.
To summarize, first on the closed-end fund market, March was a good month in and of itself and also produced a pretty good quarter for closed-end funds, both on a discount narrowing and a total return standpoint. And then moving to the 4 RiverNorth mutual funds, things are fairly similar to the way they've been positioned for the last quarter or two, but the fact that discounts have narrowed some does not diminish your opportunity set in any way.
For sure. I think the first quarter was a good one for closed-end funds. Rates remain low. The expectations for rates have been certainly modest relative to where they had been about a year ago. And so when closed-end funds are borrowing for their leverage, that's a good sign when rates are low. Right. Credit performed well in the first quarter. There's a lot of credit and corporate credit in the closed-end fund space. And when oil's rallying the way it has off the February lows, that's another good thing given the high correlation with credit. And so it was a good quarter for closed-end funds. It's our view here at RiverNorth that closed-end funds tend to have momentum. Investors like to buy things as they go up in price. And so I think that we should continue to see some discount narrowing as investors look at the space and say, I can still buy attractive discounts for many asset classes. And frankly, the prices have stopped going down, and so people like to see some positive performance year to date.
Steve, thanks as always for your comments.
Thank you.